Hello and welcome to this week's US Stock Market Report. I'm Dale Gillham, Chief Analyst at Wealth Within. This week I'll be taking you through my 10-step guide to stock trading. I'll also give you my views on the Dow Jones and this week's stocks of interest. If you're a regular to this channel, welcome back, and if you're joining us for the first time, let me extend a big welcome to you. I'm sure you'll gain some greater insights and inspiration as to how you can confidently and profitably trade the stock market. And as always, if you have any topics that you want me to cover, or you have any thoughts on this week's report, please comment below and be sure to subscribe to our channel to keep up to date. Also, before I get into the report, I want you to click that like button just below. All done? Great. So let's get into this week's report. Let me ask you, are you someone that's always wanted to get into the stock market but not really known where to start? Have you watched friends, family or work colleagues make money and wish you could have a piece of the pie too? Well, today I'm going to help you with that, as I will share with you my guide to get you trading the market and getting more profit. Now before I get into it, let me say that it does not matter where you start, it's where you finish that counts. So even if you only have a small amount of cash to start with, you can make some wise decisions now and get your money working hard for you. When your money's working hard for you, then your bank balance gets the boost you need, not just today, but into the future. The result is that your bank balance will compound and continue to grow at an increasing rate. It just makes sense that if you make consistently wise choices about how you manage your portfolio and which stocks to invest in, that you get the opportunity to compound your returns and accelerate your wealth. Compounding your return allows you to build up a nest egg so that you have more choices in life and in your retirement. So how do you do this? Well, let me take you through my 10-step guide to trading the stock market so you succeed. The first step is really simple, and that is do your homework and don't let financial terms overwhelm you. You seriously do not need a PhD to understand how to be successful at the stock market. Now, the introduction of the internet, for the most part, has been a really big step forward for a lot of us, as it has allowed us to do things like what I'm doing now, and that is record a video and help people all around the world understand how to make money in the stock market. But the internet is also known for causing overwhelm, conflict, confusion, particularly when it comes to finding answers to life's issues like investing and wealth creation. Now, rightly or wrongly, it has become the first place people visit in order to understand many things, from health, getting stains out of almost anything, and yes, the stock market and trading. But dare I say that in my experience, this ability to get information at the speed of light from tapping a few buttons on a keyboard and doing so in your own home often causes a great deal of wasted time, angst and frustration for those starting out in the stock market. Now, why is that? Well, quite simply, there's a lot of conflicting information and opinions about the best way to approach the stock market, and for the most part, those imparting the information on the unsuspecting public are not suitably qualified to do so. Hence the confusion. Let's face it, anyone can sit in their living room in front of a webcam and distribute content as if they are an expert. So it's important that you never lose sight of the fact that it's your money and it's your responsibility to choose where you get your information from, and do so carefully. Lastly, when surfing the web for trading information, I'm sure you found that it often results in you getting bombarded with ads about how to get rich, images of fast cars, beaches and exotic destinations in the ads and in the websites, all saying you don't need to do much to achieve your dream lifestyle. Seriously, if it was that easy, then everyone would be a multi-millionaire. Now, I'm sure you've seen these ads and websites making fairy tale promises, and just like all wise people do, you click the delete button. Again, in my experience of investing and trading both personally and professionally, and in teaching people over the past 20 years or so, surfing the web can and often does lead many down the wrong path, wasting time and money. Let me say that simply reading or watching free information on the internet is not necessarily giving you the right knowledge or education you need so that you ensure your long-term success. That said, there are some great websites that can help you understand the stock market. In particular, when studying the stock market, you'll come across a lot of fancy names and acronyms that may on the surface appear intimidating. But learning the industry jargon will help you become more informed. Now, Wikipedia is a great resource that can support you in your journey to understanding the stock market, as can your local stock exchange, as they often have some great beginners information and education. You can also register with an online broker or use financial dictionaries. Now, the more homework you do, the easier it becomes, and over time you'll start to make sense of the whole plethora of news and information out there. As William Durant put so well, education is the progressive realisation of our ignorance. After all, you don't know what you don't know. Often I talk to people who honestly believe they've learnt to trade the stock market on the web. And when we compare what they believe they've learnt and can do to what actually works and what they need to do, they find that all they got was just some basic information and that they really did not know much at all. Remember, price is what you pay, value is what you get. If you pay nothing, then you've gained something of little value to you. A good rule of thumb when it comes to learning about the stock market and doing your research is to understand that less really is more. In simple terms, do not overcomplicate the process. Therefore, I recommend that you only ever rely on information and education from quality providers that you can independently verify and quantify. Why? Because, as I mentioned, free information is not always valuable. That brings us to number 2. Go for a test drive. With the stock market, I recommend paper trading before you invest your own money. Given that your emotional well-being, or in other words your psychology, will play a significant part in your long-term success. Why would you risk your money trading unless you know you can be successful, or at least have a high probability of being successful? Now, paper trading involves trading in a simulated environment where you practice buying and selling without risking your own money. By going for a test drive, you will not only be able to test yourself, but also how you go about trading and managing a portfolio so that you can prove to yourself you can do it. Trading is not about having the best buy and sell rules. A trader is someone you become and a skill you develop. It's a process, strategy, tools, techniques, knowledge and skill all rolled into you. Lastly, you have to earn the right to be successful as a trader. You don't just wake up one day and magically become a successful trader. Traders know what works best before putting their money into the market. Trading this way significantly lowers their risk, while at the same time increases their overall profitability. When paper trading, it is a good idea to select a small number of stocks to buy and sell so that you create a well-diversified portfolio that aligns to what your goals are, and to include these in a watch list so that you can observe and monitor them on a weekly basis. Now, it's recommended that you buy and sell these stocks based on your rules over 3 to 6 months to not only see how the stocks performed, but also how well you did in managing them. The beauty of paper trading is that you can get 6 months experience in a few hours rather than over 6 months. Now, paper trading proves to you that not only can you trade, but that your trading rules work. It builds confidence and competence. Given this, it's invaluable to you in your journey to become a successful trader. It is also important to consider the amount you're willing to commit to each trade and the time frame over which you're trading. This is very much part of the process I talk about, and this is one of those things that separates those who are successful from those who are not. The time frame and the amount you're willing to risk means, are you looking to trade over the short, medium, or long term? Understanding this is vital, as this will have a bearing on the stocks you select and how much you invest in them. You also need to consider how you will manage your risk when trading the stock market. as you need to ensure you do not take on too much risk and trade outside your comfort zone. Now you can manage your risk by asking yourself, how much am I willing to lose on each trade if a stock I buy falls in value? Now I cover this subject in more detail in my YouTube video titled, What is a Stop Loss? Understanding how to create and manage a portfolio are critical skills everyone should possess if they want to achieve success in the stock market. In my latest book, Accelerate Your Wealth, I teach a proven, low-risk approach to creating and managing portfolios, as well as some simple but powerful strategies to buy and sell that will accelerate your wealth, so that you put yourself in the driver's seat. This brings me to number 3, and that is from little things, big things grow. Now I'm constantly asked, how much do I need to get started? Normally this comes from somebody thinking, if I get into the market, how much do I need to make a worthwhile return? Now to be upfront, this is not the way to think about the market. The market is a long-term plan and not a short-term get-rich-quick solution. It is a long-term process to achieve a worthwhile goal. It does not matter where you start, it's where you finish that counts. The most important point is to get started, regardless of the amount of money you have now. Leaving things until you believe you may have enough to make it worthwhile is unwise and will severely hold you back financially. In fact, delaying getting started is the biggest regret our students and graduates tell us in their feedback to us. And without exception, all of our students tell us that they had wished they had started earlier, not just with our education, but in their trading. So if you're not getting where you want, ask yourself, what is holding you back and what can you do now to change things? Now let's get back to how much money you need to get started. Some say you only require a minimum of $500 to purchase a stock. And whilst this is true, in fact, it is possible to buy just one stock for a few dollars. That said, you need to consider the cost versus the potential reward. Let me explain. When buying and selling stocks, you will pay brokerage to get in and get out of the trade. So you need to balance these costs against the potential profit on each trade. For example, if it costs you $50 with an advice broker to place a trade, this equates to 10% of your $500. Therefore, the stock needs to rise by 10% before you break even. Given this, I recommend using a minimum of $1,000 to purchase each stock, as you'll avoid brokerage fees eating away at your profits. If you only have a small amount of capital to start trading, it is recommended that you develop a saving strategy so that you can put some cash away regularly and then use this capital to build up your portfolio until you hold at least 5 stocks. Once you hold a minimum of 5 stocks, you can begin to increase the amount of shares you hold in each stock. If you sell a stock, reinvest the capital from the sale into another stock, as well as any savings you have accumulated to increase the amount you are purchasing. Gradually, your position size, or the amount of cash you initially invest in any one stock, will increase, rather than the amount of stocks you own, which will ensure you are able to manage your risk. Okay, so that's the first 3 steps. Now, rather than rushing through all 10 and not giving each the time it deserves, as they really are essential to your success in the stock market, I've decided to split this subject into parts. So you'll have to wait for the next part in a week's time. Now, some of you may be thinking that what I'm covering is overly simple and may not put a lot of weight into what I'm saying. If this is you, then you need to think about why you think like that, as many would-be traders do 2 things. The first is that they undervalue what seems simple, thinking it's of little value, and then they overvalue things that seem more complicated, as they believe that if it's complex, looks high-tech and sexy, then it must be better when it's not. The reality is that your journey to success as a trader will be as hard and long or as easy and short as you choose to make it. What I'm sharing with you is the shortest, easiest way to success. Now let's get into this week's stocks.
Please remember that this report is an educational tool, and as such, your personal circumstances have not been considered in the analysis of the compilation of shares included. The content of this report cannot be considered personal financial advice. If you have not done so before, pause the video and read the disclaimer on screen. We hope that you enjoy this week's report.
Okay guys, welcome to this week's stock part of the report. Hasn't been a great week on the US market. I was expecting the market to have one or two down weeks, but it hasn't really done that. And thanks for the people that commented on the video and given us a couple of stocks there to have a bit of a look at. So I just want to have a little bit of a look at that. I haven't got, they're all about stocks, so I'll actually cover that when we get into the stock section of that. But first I wanted to cover the Dow Jones and just show you what I mean here in terms of how the market's actually moved. You can see here it closed right on its high for the week ending the 15th of February 2019. So it closed at 25,883.25 points, opening 25,142.81 points, 874 point range. And you can see massive move on the market. And as I said, I was expecting it to fall away, but you can see there's a 3% move on the market, which is quite a nice little move on the market itself. After a week that was quite indecisive, and this is the interesting thing, it was indecisive the week before. The thing that worries me, we've had 1, 2, 3, 4, 5, 6, 7 weeks up. And if we scroll back, you'll probably see there's not a lot of times when you see 7 green bars in a row. It's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. But we had a little bit of a folding over here with some smaller bars. Over here, keep moving through. Here's another 7 bars over this sort of area there. But most of the time it doesn't actually do that. If I keep going over, here's another area, 1, 2, 3, 4, 5 bars. Why does that keep plonking up onto my screen? I'm sorry guys. Keep moving over. So you can't see too many spots where you have 7 bars in a row. Here's another area, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So they're fewer and further between. And that's really what I'm trying to share with you. The higher it goes, the longer it goes without pulling back, the more the probability is that it will pull back. And that's the thing, is a lot of people don't understand when they're looking at stocks. They see stocks moving up quite strongly and then they go, wow, and they see volume coming in, they see it move 10, 20%, and then they start jumping in. But at that point in time, it's about to tip over, because what happens is people think, oh, it's getting a bit too pricey, I'll stop buying it. So those in the know will stop buying it, and the amateurs come in and take it a little bit further, and then it folds over because the professionals are starting to sell away to take some profit. So again, I'm still expecting the probability, or that pendulum has swung to that point where it's now starting to become overdue for a pullback of 1 to 2 weeks. That may happen this week. I don't know what might cause it, but a 1 or 2 week downward move at this point in time is not really an issue. Remembering that's the all-time high through here back from October at 26,951. So it is starting to move up nicely, and the move down will tell us here how strong the market actually is, and whether it will move through that all-time high over the short to medium term, and over the next few weeks when it does fall away. And it will fall away in this next month. It's no doubt in my mind it will fall away, because generally trying to go up 7 weeks, as you saw, the longest one we saw was 11 weeks, which is another 4 more weeks. But in normal cases, it will fall away for 1 to 2 weeks. So just watch out for that. Now I want to go to the stocks. Now let me just bring up another workbook where I've got the stocks into it. It's had some really interesting questions actually from a couple of people here. Let me just save that as I get into that. The first one is, well, it's coming up, it's from Kim Thien. And thanks, Kim, for posting into this US stock market report. Hi, I'm new to your channel and I have watched lots of your videos. Thanks very much, and thanks for the nice and welcome to the channel actually, and thanks for the nice comments. I think they're all really informative and very helpful. I'm glad you're finding them quite helpful, Kim. I'm looking into Coty Prestige shares. They are a beauty company and were recently bought by P&G brands, or Procter & Gamble brands. But after they bought some of the P&G brands, the sales were up to their expectation and has fallen rapidly ever since. Now recently, JAB, a company, announced that they will be buying some of Coty shares because they believe the company has lots of future potential. the share now increased. Do you think it's good company to start buying shares as of now? Now, JAB is a private company. It's a German company that's got a few brands, so it's not listed on any exchange. And it is trying to buy some of Coty shares, and obviously Procter & Gamble has some of that. I think JAB has a sizable percentage of those, and they're just increasing their investment into that. Now, we're going to look at Coty, which is on your screen right now. We're also going to be looking at Procter & Gamble, which is the next stock I'll look at. But looking at Coty, you can see here how its all-time high was way back in July at 32.71, or July 2015, and it came right down to December of this year, 591, and has bounced since. And obviously February's been a strong one with a rise of $4.30 from a start at $7.75. So that's a huge move. And that was sort of really what happens to a lot of people, is they wait for a share to completely rise up strongly, and then they start to get into that at the last minute, only to see that the market is selling, or the professionals starting to sell. So we may see that here. Now, looking over the weekly chart, I'll go that for a little bit more detail, or a few more extra bars, and we can see here it's looking quite nicely. It's had 2 weeks, beautiful strong move up here. Now it looks like to start buying shares of now. Look, I think it's looking all right. I do think it's all right, but it just depends on how much Procter & Gamble, if they want to buy more shares, or how many shares JAB want to buy. And to me, if they're not a listed company on any exchange, it's a little bit harder to get information out of them what their intentions are. Maybe it's looking at Coty as a takeover target, and that's why they're increasing their position size. They just need to tell the market that they're increasing their position size. So remains to be seen, but it is a really strong move at this point in time. It's one of those things, as I said, it looks like it's a good stock at this point in time. Actually, no, I don't want to do that. Let me go and put this one on first. I think you're on a good wicket here. I think you're on a nice looking one. There's 86.8% since that low, and then since this low here, it's 45.26%. What I would expect to happen would be for it to fall over a little bit, because there's been a lot of buying in it. And if JAB is buying that, they want to keep their buy price lower. And what I mean by that is their average buy price. So when they're looking at buying a sizable chunk of a stock, or they want to increasing their position in a stock, they want to keep their average buy price lower. And so when they see stocks moving up by 45%, that's pushing their buy price way up, because the market, meaning you, know about this and seeing it. And so everybody's starting to jump in onto onto Coty shares, in hope that JAB keeps buying and keeps taking it up even higher, making that scarcity that, they've got a lot of competition for this share. But JAB can just pull back and stop buying. And if they pull back and stop buying and sit back for 2-3 months, they could quite easily do that. And you'll see the shares start to drift down again and fall away again, which I would expect to happen, because, again, a company like JAB is not going to overpay for the shares, if that makes sense to you. So I would expect maybe 1 or 2, 3 weeks back, it may even come back to that line, back through to this sort of level here at that $7.83. But right now, I think it's run a little bit too hard to jump into it right now. As I said, I think I would wait for it to come back a bit, let the dust settle on this sort of, not announcement, but you know what I mean, the news of JAB buying into it. But after that, I think it might be a really great stock to own. What you want to see is steady buying, and that steady buying coming in after you and keep taking that price higher. But very good looking stock. I think you've done well here. Let's have a quick look at Procter & Gamble as another one that you've actually mentioned in here. This stock I really like, Procter & Gamble. Have a look at that. It's beautiful trending stock, great stock. It's actually in my book, my latest book, Accelerate Your Wealth, Your Money, Your Choice. I do go through all of the top Dow stocks, the top 30 stocks on the Dow, and trade those. So it's available on Amazon, the US version of my book, which is all the US stocks. You can buy it on Amazon and a lot of other online places, all the good bookstores around the US. You can order it and actually see how I've traded the top Dow stocks, or the top 30 stocks. Oh, that is the Dow, isn't it? A lot of those stocks also on the S&P 500 in terms of the top 20, top 30 stocks as well. So to show you how I've actually traded stocks like Procter & Gamble, and we made a phenomenal return in the book. I think The return was over 400% in a 10-year period, so it was a really phenomenal return using some really simple techniques and strategies and a real simple trading plan. So Procter & Gamble does look really, really good to me. That's one I'd prefer. The next one I've got is JD.com. Now, this is from Kong Ung. He says, "Hi Dale, thanks for reviewing the stocks for me last week. What do you think of JD.com? It's similar business to Alibaba." Now, this looks pretty ordinary to me as far as the stock is concerned, and there's a couple of reasons why. You can see here how its all-time high was back in January 2018 at $50, and it fell really, really heavy to an all-time low at 1921, and currently the monthly chart's not looking super strong. There's a couple of things here that I need to talk to you about. One is Chinese stocks listed on the US market. They always should be, right at this point in time, should be really, really treated with caution for a lot of obvious reasons. There's a lot of conjecture out there that a lot of Chinese companies have backdoor listed into the US markets, that their financials necessarily aren't exactly what the financials are. So what they're reporting onto the US market is not necessarily what the actual real story is in China. And there's been documentaries on this in the last 12 to 18 months, and a lot of people have lost a lot of money. And there's companies out there in the US actually finding companies that have been doing that and shorting them heavily. And this may be one of those. I don't know. I've not researched JD.com and their background and what they do. Yeah, they look like Alibaba. I went to their website. It's all in Chinese. I don't understand what the website's like. Alibaba is a good stock. I do like Alibaba, but again, Amazon to me is a better stock in terms of that sort of thing. Right now, looking at that weekly chart on JD.com, it doesn't look super exciting either. I think this is more speculation to me. I think this may be just a bit of a short run up and it's going to start to fall away. I would think if it does keep falling away, that 1926 low there's gone, and then this one here at 1921 will be gone if we start seeing some red bars here. So I think I'd stay away from this one, Keung. I would not get into this stock at this point in time. Pick better ones. As I said, pick Amazon or pick Alibaba or some other great big stocks like Procter & Gamble, another good looking one. There's quite a lot of big stocks in the US that are doing super well. I really do like some of those FANG stocks. We're talking about Facebook, Apple, Amazon, Netflix, Google. They've all hit 30, 35, 30, 40% down last year, so they've all taken a bit of a hit. They're all starting to look a lot better this year, so they should be providing some good opportunities. But that's it for me for the US market report this week. Please like the video, put some comments down. If you've got any questions, please do that. And remember, last thing you do, subscribe to the channel, and we'll talk to you next time. Good luck, good trading. Take care.